All right. What up, everybody? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. All right. So, we had a definite distribution day. I will explain what that is. We're going to talk crypto. We're going to talk the indexes. We're going to talk the sell off. We're going to talk the Fed. We're going to talk about things that I am doing. I've been explaining to get out and profit, even though I think those stocks might go up at some point, but take your profit, get out of margin, wait for that momentum day. I told you about how many times they're showing up. It's 1 out of 8 every red days. When that shows up, a couple will be strong in your watch list, double down, triple down, try to pivot and get out. I've been doing that. I've been moving money to the side. Didn't have everything out, so took damage like the rest of the world. All sectors down, a couple things went up. We'll go through it. But before we get too deep into it, please subscribe to the channel, like the video, make me a comment, and select all if you haven't already for the notifications. Below in the description, I have a link for Webull. Right now, they are offering you $9,600, up to $9,600 in free shares. I know that Apple is in there. A lot of people that I have referred have gotten a lot of different shares. It is random, but I know they have Apple in there and they have fractional shares at Amazon right now. I also have the Coinbase link in there. If you don't have Coinbase, I think they give you $10 in free Bitcoin just for signing up. And I am bringing on a new sponsor, which is Mumu. I'm speaking with them about the details of it. I'm quite excited. I've heard really good things about their platform. I'm looking forward to checking it out. I think that they have everything that I would be looking for, plus access to international markets, which is something I don't really have in my brokerages. So that's kind of exciting. I'm looking forward to digging into that. I'll let you know more, but for signing up and verifying and whatnot, there will be some free shares available to you, and I'll walk you through, maybe do a tutorial on the platform here shortly. So yeah, let's just dig into it. Let's just talk about it. It is what I thought would happen. I had mentioned 5 months ago in a video, some historical data. I pulled out the book on every federal fund and discount rate change by the Fed, what has happened historically since the beginning of the stock market, when we have a hawkish Fed, and certain signals that take place. Real quick, let's just take a look at that and go back to that clip, and then we'll start discussing more and more, okay? Look, like, here's a little fun fact for you, okay? Throughout history, anytime that the Fed has come out and either raised the rate 3 times in 1 year or announced that it will, sound familiar? Listen to what I'm saying right here. Any time in the past that the Fed has come out and either raised rates 3 times in 1 year or announced that it is going to raise it 3 times in 1 year, generally that was the start of a bear market and impending recession. And unfortunately, I am not making that up. That is a historical fact. So Jay Powell and Biden just came out and said, we're raising rates 3 times in the next year. And historically, any time that rates have been raised 3 times in 1 year or announced that they would be, it was the end of a bull market, the beginning of a bear market, and the beginning of a recession. So now I want to level with you. Well, Chris, why would they want to start a recession? Why are they doing this to us? Well, I'll explain it to you. The Fed got themselves in a bad situation. Okay? There was a pandemic, that emergency acts, emergency uses, emergency money printing. They printed a lot of money. They propped up the market. Okay, they stimulated the market. They made people stay at home. They sent them checks, and those checks went into the market. It propped it up. It inflated it to no end, and we had a raging bull market of 2020. But they're in a tough situation. They can do one of 2 things. So the first thing that they can do is they can raise rates to combat inflation, and that will create a stock market crash and possible recession, especially when coupled with slowing growth. Now, the second option that the Fed has is to keep the rates at 0. and let inflation run wild. But if they let inflation run wild, then the US dollar becomes weaker, and they, meaning the United States, runs the risk of losing the world reserve currency. So what do you choose? Do you choose crashing the stock market and going into a recession with a framework that now has a higher interest rate? And by the way that most recessions end is by the Fed lowering the interest rate. Okay? So number one, you raise rates, create a stock market crash, create a recession, but have a card now, because right now they have no card. They're at zero. They can only go backward. They can only do where they pay you to borrow money. It's called negative interest. It's not good. so they don't want that. So they got to build a framework. They got to raise the rate, crash the market, and build a recession in, or they can let inflation run hot, let the rate stay at zero, and possibly lose the world reserve currency. So the lesser of two evils is to crash the market. Okay, guys, there it is. 6 months ago, I'm explaining before all this, I'm saying, look, two options. One, raise rates, crash market. The economy is hot, slow growth, create a recession. While you raise interest rates, you're actually building a framework for the future so that you can lower those rates later, which pulls us out of a recession historically, but puts a Band-Aid on the situation as far as the debasing or devaluing of the reserve currency. So, yeah, I mean, look, the Fed is not going to tell you the real reasons, okay? The real reasons are, and we just found out, if you can just read between the lines, go back and watch it. I'll play a clip for you. The Fed is not going to tell you the reason that they're really doing this is to protect the world reserve currency. They lose that, they lose the dominance in the world, okay? Number two, they're not going to tell you, yeah, we want crypto values and stock values to come down because it's deflationary pressure and helps us with our bigger plan, okay? Now, look, if you're not really surviving this market and you're concerned and you're losing money, I put the Discord link in the description of this, okay? And you can come in there for free. You can chat with me. You can DM me. I'll talk to you, help you out. You can ask other people about the courses. You'll see the general, you'll see the stock, and you'll see the crypto. We're not really in there. We're in the Jedi area, which you will not see the Jedi Council, or the elite areas until you upgrade. Look, personal service goes a long way. Coaching goes a long way. I help you every single day in the Discord, 7 days a week. I'm passionate about it. I help you with crypto. I help you with stocks. I help you with technical analysis. Plus, you get all the courses, you get all the trade alerts, you get the one-on-one coaching with me, you get the Wheelhouse Wednesdays, plus all the recordings from the previous Wheelhouse Wednesdays. Quite impressive and very inexpensive for what you get. If you want to be, stop losing and understand strategies and tactics and how to navigate these different environments and situations, you definitely need to be in the group and be chatting with me and asking questions and stuff like that. It is $99 a month. That is nothing. You shouldn't be in the stock market if $99 is a lot for you. But right now, you can get everything fully loaded for half, which is $665. So it's half, and it has tax with the little platform that takes the payment. But $665, you get full access to the Discord. You get the trade alerts, the Wheelhouse Wednesdays. You get the one-on-one training and all the courses, of course, and more courses are going in. That is really, really beneficial. The way that I have all my settings and charts and do my technicals is a little bit different. Like, as an example, it was down on the Dow yesterday, yet this is still a blue candle showing the wick above the minor, the minor 1, 2, and 3 of this pattern. It's forward looking. I have all my settings different. If you guys had any idea, now I know the guys in the Discord, they know a little bit about what's going on. Is I use the HMA, I use the EMAs, I use floating deviations. This is a benchmark with two different signal processes, benchmarking against the S&P, the NASDAQ, whatever I'm looking at. And then, I use the stochastic, I use a vortex of special settings, MACD. This is a trend indicator. And then, behind all of it, with all the coding, we have EMA trend directions with 100 trending up or down length. We have EMA pressure, super trend directions, super trend reversals, parabolic SARs, parabolic SAR reversals, HMA trend lines, HMA pivots, RSI divergences, MFIs, RSI levels, oversold, overbought, RSI cross 50s, MACD divergence, MACD histos, cross signals, wave trend divergence, stochastic Bollinger, RVI divergence, OBV divergence, CMS cross 50 line, CMS. Oh, hold on one second. Oh, it's Jay. It's Jay Powell. Hold on. What up, Jay? No, I know. Well, you'll get some sleep. I mean, look, she's French. Take her out for some wine. Look, man, I'm glad you called me back. We got to talk. No, I get it. Okay, I'll be quick. Look, man, if you don't slow down with this hawkishness, you're basically going to need to set up a hotline for a suicide watch. There's a lot of guys out here that don't know what's going on. Okay, I know, I get it. You were giving warnings back in August and September, and institutions, and I was picking up on it. Some of these guys, but a lot of these guys don't know, Jay. I I get it. I know. I feel for you. I know you're like the fall guy. You're like the patsy. You've got an administration over there printing another $8 trillion, sending defense packages, fiscal spending, the SNAP program. I mean, sending Javelin missiles. You got doing deals with all kinds of people. I know. He's spending faster than you can get inflation down. I get it. I know how it works. You got to raise the rates, but. Look, man, you either need to get a control of the administration to slow down, or you have to at least put the markets a little bit at ease, okay? I mean, look, let's be frank. You kind of BS'd your way through this whole, transitory thing. That was laughable back then. Look, don't hang up. I'm not trying to offend you, but look, let's just call it what it is. Has inflation ever been transitory? Ever in the history of the world? No, you know that. Come on, Jay. You already know. So listen, you did it once before. Put the markets at ease. Let people get out of their positions. Okay? Take Lagarde out. Go get a bottle of wine. When you get back here, we'll have a cigar. We'll go out on the boat. We'll talk about our next move. Okay? Yeah. Well, hold on one second. Vinny wants to say something to you. Vinny, my cousin Vinny. All right, hold on. All right, real quick. You ball breaker, you. Mrs. Transitory my balls. How you doing, Jay? Good. Hey, listen, I know they call you the hawk, but we know you're the whale, and I love you. I'm not saying nothing, Jay. I don't know what kind of security detail you have going on out there, but I'd hate to see the whale have a harpoon put in the back of his head, And then I'd hate to be the guy that has to show up and buy you a headstone too. What I'm saying, Jay, we got to get it under control, because the last thing anybody wants is for it to be a rainy night in Lyndhurst. You know what I'm saying? Now, look, I could give a shit about the inflation. You know what I care about? I care about the ports. I got all the ports locked up from China to California. Nobody's getting in, nobody's getting out without my say-so. All right? You want those vaccines to go, you want those missiles to move, you gotta get back home, okay? You gotta do what I tell you to do. Don't worry about the little man with the white hair, okay? I need you to go home, plug in that shiny little money printer, okay? And I need you to put your finger on it and just start filling up some envelopes. Come over to the house this weekend. My mother's cannolis will be ready. I'll have peppers and eggs. We'll go on the boat. If the envelopes look good, hey, you can bring the kids. If not, you're going to be traveling light, okay? I want to pass you back to my boy, okay? All right. You take care. Calm down. You know how Vinny is. Look, he's not wrong. You know what I'm saying? But look, I got to go. I don't want to cut it short. Have some fun with Christine and go have some wine. Hold on one second. Vinny's saying something. Something about some Sangiovese. It's a nice varietal. It comes out of Tuscany or something. He's gonna send you a bottle. A driver's gonna bring you something. So, anyways, we'll see you when you get back. Don't forget what I said, Jay. We need to take care of this problem. You need to put the markets at ease, okay? All right, you take care. He's under a lot of stress, man. He's got bags under his eyes, and he's like he was telling me that Biden had threatened to get rid of him as the Fed chair, and he was all stressed about that, and he came clean with the transitory thing and kind of had to like buckle on that. And then the whole thing was a posturing where he was going to get the job, but unable to get the job, he had to say the transitory, he had to bite the bullet, he had to become a hawk, and meanwhile, he had to be the fall guy and the patsy while Biden is putting his foot on the gas and spending more money than even got us here. I mean, so I feel bad for Jay, but I feel bad for you too, because you're just now learning how the world is really, really working in this whole market thing, and to find out why stocks are going down and crypto's going down, it's because they want it to go down because it's part of their plan. If they have the values of those go down and the values of your homes and the values of everything, it's deflationary. It helps them get to their normalized rate of 2%, which will probably be normalized of 3 to 4, and that'll probably be more like 2024. And by then, mortgage rates will probably be like 7-8% on your 30-year fixed, and hard money will probably be higher, and it's going to go through its process. I mean, remember, recessions go every 5.8 years, but so I had a clip. I had this theory, right? It was a tinfoil hat conspiracy type theory. I put it in a video. I said, look, I look at all these charts. I look at crypto. I look at stocks. I look at every industry group. I watch them on the minutes, the hour, the 4 hour, the daily, the weekly. I study these things. And on Bitcoin, I was seeing that every time that there was a rally, there was a push down. And I couldn't figure out why. And I came up with this theory. Well, now that the Fed spoke, I want to show you this clip. And I guess my theory was correct. So let's take a listen. I study these things, I watch these things, and I watch a lot of charts. It's not just Bitcoin. I watch all of crypto charts. I watch all stock charts, every industry, every sector, every group. And I know the way these things work. And I'm telling you, this is like being pushed down for whatever reason. I don't know the reason, and I don't know who, but it's being pushed down. Now, as I think about that, and this might be a tinfoil hat conspiracy type of comment, but the more I think about that, I think, why would they do that? And who would want to do that? Who would be motivated to do that? Well, it could be government. It could be like IMF. It could be government. It could be like a major agency. To protect the dollar. If you notice, the dollar is going up. It's screaming. It's going up. Yeah, so maybe my little tinfoil hat conspiracy might be true now that they've put their cards on the table and said, yeah, the market is reacting the way it should, meaning we're going to be super hawkish, and we've tried to warn you, and we're about to literally legit crash that stock market. Now, they have ways of buying bonds and buying assets and propping up stock markets, and they can take it down too. The Fed can make it and they can break it. Okay, so how could it be possible that a major agency like the Fed or some other agency or the IMF, could crash it? Well, think about it. How much Bitcoin and crypto has the U.S. government seized? I mean, they seize drugs, they seize stuff, and then use those to bait other people to get them to like roll up the chain or whatever. So it wouldn't surprise me that they could do it with some crypto and then put it back in the evidence locker or whatever. However that works, I don't know. But I don't know. I don't know any of this. I'm just talking here. But crypto is it's definitely tied to the NASDAQ, as we saw as the Fed was speaking, and the NASDAQ just dropped, like I've been talking about in the other videos, why you need to get out. Crypto went down with it. It actually dropped about $2,000. So yeah, after they crash the market, there's a recession, then there's usually a housing crash, and then the Dow. That's why I keep showing you the Dow. It's a leading indicator. I want to keep an eye on the strength of the Dow, because when the economy fails, and it's a total barometer for the health of the economy. So when the economy fails, the Dow will fail, and then when we get to that recession period, the Dow will start to lead us out. Okay, you know, the one thing about real estate is it's a little different than every other time. Every time there's been a recession and Fed hike and all this stuff that we're talking about, there has been a real estate crash. The difference is this one time is the demand is so freaking high. It's different than all the other times that there were recessions and followed by housing crashes. So it's hard. I've got to keep an eye on it. It could be a little bit different this time. Maybe it doesn't crash as hard. I don't believe there's anything like a soft landing. I think Jerome Powell, in his little speech today with Lagarde and the IMF president, the guy looked completely nervous. He completely looked like he was lying. He was talking in circles. He talked too much. Let's just take a look real quick.
How are you feeling right now about your claim that we're not heading toward recession?
I guess I'd start by saying that we are unified with our allies around the world in opposition to the invasion of Ukraine for no reason, and the human suffering that's going on there. And while these economic matters are important, there are very fundamental things at stake there that we want to keep in mind. So in terms of the U.S. economy, we are a bit more remote from the immediate effects of the war compared to Europe, for example. But we will be feeling them over time, and they will come in the form of upward pressure on inflation, further upward pressure, and a bit of downward pressure on output. But the U.S. economy is very strong, performing very well. By most forecasts, we'll have another strong growth year this year. The labor market is extraordinarily tight, extremely tight, historically so, and to the point where really there's an imbalance between supply and demand for workers. And of course, the big issue that we're very focused on is inflation, and getting inflation back down to our 2% goal.
But if we start to slow materially in our economy, will you stop tightening, even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically, that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that. And it's absolutely essential to restore price stability. Without price stability, really, the economies don't work without price stability. We need that to have a strong labor market for an extended period of time. We need it for financial stability. So we must do that.
The market has 3 50 basis point hikes coming in the next 3 meetings as of this morning. Is that reasonable?
So I try not to comment on specific market pricing for things, but I will just say this: at our last meeting, and this was in the minutes from the meeting, many on the committee thought it would be appropriate for there to be 1 or more 50 basis point hikes.
Are you one of those people?
I don't disclose my own path. I try to lead the committee, but so I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say, though, is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front end loading whatever accommodation one thinks is appropriate. So that does points in the direction of 50 basis points being on the table.
So I sent my girl down to Mexico, and she came back with some plump lips. She's making those duck lips everywhere we go. Hey, don't make me send Vinny after you. Hey, I talked to Jay earlier, and I told him, I said, when you come to the house on Sunday, make sure you bring flowers. The wife likes flowers. All right, so yeah, Jay Powell, we can't trust him. That whole crew out there in DC, all bad. We're in trouble, guys. We need to be getting to cash. We need to get defensive. We need to be shorting. Actually, in this video, right up the road, a couple minutes, I'm going to put in the top how to short the stock market. I'm going to teach you guys. If you haven't seen that video, watch the video. It'd be good. Like it too if you don't mind. Look, I just want to say this is really important, this earnings season that's going on. Everything's going to be kind of paid attention to. Like when the Snap comes out, they're going to be taking a look at Facebook and Pinterest. When Facebook comes out, or app software, just like the banks, everything, especially the mega caps. If we start seeing slowing growth on these ones, oh my gosh, it's going to be devastating the market. So watch out for that. You guys do need to know about the lockdowns in China. We have over more than the entire population of the United States is being locked down in China right now. There's over 470 major freight ships just sitting in the ports. They can't berth. They can't dock and unload and berth and get the containers out. We got problems, even at the warehousing level, all the way from manufacture to shipping to export off the docks into the warehouses. I mean, it is a debacle for sure out there. The NASDAQ's looking real bad. You guys got to know the NASDAQ is just getting crushed, even though there's some really good long-term investments out there that are getting to those 52-week lows. I wouldn't be buying them yet. But like I mentioned, like Disney, PayPal, Netflix, SoFi, DraftKings, Peloton, these are really, really, really low right now. There's other ones too, obviously. A little bit of advice before I go. Don't be looking at the futures all night after you've been stressed all day. Make sure you're just trying to get out into cash so that you can trade. This is not an investable market. This has to be day trading and scalping to make money, or just be out of it. A little statistic, back in 2021, it was about 25% retail, 75% institutions. Then a poll came out, it was 83% institutions and 17% retail. And I think it's dropped down to 14 or 15% retail. So there's not that much of us left out there. A lot of people went back to work, maybe lost their money in the market. I don't really know exactly what happened, but there's less. You can make a lot of money shorting. Just like a big bull run going up, you can make a lot of money going down. It's the same thing. You're just going in a different direction. You'll need a margin account for that. I teach you all about that in my courses, and I have courses on shorting and exactly what to do and how to do it. But I have a little tutorial for you that you can click in the top right corner above in a couple minutes here. Let's see. Yeah, you need to be defensive. You need to listen to the market and do not fight the Fed. Don't fight the Fed. What else? Let's see. If you didn't set a stop and you're deep in the red, you have to wait for one of those huge green days, and you have to just put more money in on it, springboard it up, and get it out, even if it's at a loss. I'm telling you the truth. Like, I know it sucks, but it'll suck less than where it's at right now by putting money in. You'll get it all back. You just got to be like on that minute. Use the either the minutes or the hourly. If it's bullish to the hourly, like, you're showing enough strength. That's really good. What else? I think that's about it. Why don't you watch the shorting video? I appreciate you watching to the end. If you don't know, my name is Chris. Vinny's around here somewhere, and we appreciate you. Thanks for watching, and welcome to the wheelhouse.